Interest rates just dropped, but somehow mortgages still might be more expensive. Let's break that down today. Hey everyone, it's Alex. I live and breathe mortgages, Oakville Real Estate, and multiplexes across the GTA. If you want to have a call about buying, selling, or investing, click the link in my bio. Here's what's happening in the Canadian mortgage world this week, especially for anyone buying, renewing, or planning in Ontario. Let's start with the elephant in the room here with the biggest headline. Of course, the Bank of Canada just cut its overnight rate to 2.5%. And this is the first rate drop since March. Why? Slowing GDP, inflation around 1.9%, and the unemployment rate has gone over 7%. The economy is losing steam, and the Bank of Canada is honestly trying to soften the blow. So what does this mean for you? If you're a variable rate holder, you might see some payment relief soon, but don't expect overnight changes. Fixed rate borrowers coming up for renewal are still looking at way higher payments than 5 years ago, but this rate cut might signal a soft landing ahead. Okay, the second update here today is the mortgage renewal crisis. Here's what isn't making the front page, but should be. Thousands of Canadians are hitting their renewal windows, especially those who locked in the fixed rates in 2020 and 2021. And those renewals coming in a lot higher. Even with this week's rate cut, payment shock is very real. You have to think, hundreds more per month in Ontario specifically. And Equifax says household budgets are already showing strain from rising mortgage payments. So if you're renewing soon, you should start planning now. Now, again, let's talk about fixed versus variable and what's winning. We're seeing more debate again between fixed and variable. And with the Bank of Canada likely to cut again later this year, possibly in October, maybe December, variable rate is still more attractive, but it still carries a lot of risk if it flips. If you are the type to lose sleep over uncertainty, then variable just isn't for you. Fixed will bring you peace of mind, even if the rate is just a little bit higher. The next big news update is $13 billion to build homes. Will it actually help Ontario? The federal government just launched a new agency, Build Canada Homes, backed by $13 billion to boost affordability housing. And their goal? Use public land for faster builds and partner with prefab builders. They're also focusing on middle class and lower income Canadians. For Ontario, this could eventually lead to more supply and maybe some pressure off prices, but don't expect overnight change. Zoning, red tape, land costs, all of these things are still slowing down everything. So what to watch next? Here's what could be tomorrow's headline. More rate cuts. More economists usually say yes, but slowly. The Bank of Canada isn't in a rush here. There's not really any more first-time homebuyer incentives, but watch out for revamped programs and provincial help, especially through the first-time homebuyer savings account and the land transfer tax rebates. And just a reminder, borrowing cost isn't just interest rates. Don't forget about your closing cost, stress test impacts, and insurance. The real cost of home ownership is still climbing. Let's be real here. My final thoughts? Lower rates are finally here, but they're not some kind of magic wand you hope for. If you're renewing soon, now's the time to strategize. And if you're buying, rate relief is coming, but affordability is still tight. If you need help breaking it down and reviewing your numbers, reach out anytime. And if you found this helpful, please give it a thumbs up, hit subscribe, and let me know in the comments where you're at in your mortgage journey or what questions you have, and maybe I'll tackle it on next week's mortgage update. I'll see you next week.